Hi guys, this is Mosh. Welcome back to another one. If you're new here, click on that subscribe button. If you want to check out my daily trades, my profits, my losses, any updates, check out my Instagram account. I'll link it in the description below. Today, I'm going to talk about how to make money while sleeping. In other words, passive income. Currently, for a lot of people, the only way to increase your wealth or your income is to increase your productivity. To increase your productivity, you have to work longer. Or the other option is to look for a job that pays more. If you look for a job that pays more, generally you'll probably be working harder, working longer. One thing you need to remember is you'll never get rich working for someone else, because in a sense you're making them money, you're making them profits if you're working for a company. So what are your options? Option one is to open up a business. The problem with that is high risk and it has a high startup cost. 90% of startups fail. Second option is to do day trading. It's something I do. If you're not sure how to day trade, check out my technical analysis series. I'll link in the description below. I make a lot of money day trading, but I recognize that it's high risk and it's not always guaranteed. And I'm looking for something that's guaranteed. Your third option is to invest in dividend paying stocks. So what is a dividend? A dividend is a sum of money paid by the company's profits, either yearly, quarterly, and some even do monthly. To know how much you'll get paid from a company, you can check the historical dividend yield. So how is a dividend yield worked out? It's like this. Let's say a company pays $3 dividend per share. So that's how much they pay now. Now, if the average share price you bought it for was $30, all you have to do is $3 divided by 30 times 100 to put it into a percentage, and that gives you a dividend yield of 10%. So what that means is if you had $1,000 invested in this company and it gave a dividend yield of 10%, you would make $100 every year from just having invested in that stock. So the next question is, how much money do you actually need to live off to get an income without ever working? This is a problem I have with Andre Jick and Graham Stephan. They have very good content. However, you need a vast amount of money to make a living income, and you can work this out yourself, and we'll go through a very simple calculation. So well-established companies, they give out dividends of about 3%. So let's say I needed $50,000 every year to live off, to cover all my costs and live the life I'm living now. I need $50,000. So all you have to do is 50,000, the amount that you need to live off per year, divided by 3%, which is 0.03. That gives us 1.6, just over $1.6 million. So this is where my day trading comes in, where I try and make as much money as I can, and I put that straight into my dividend investing portfolio. You're probably thinking, what should you actually buy then? Now, if you're a complete beginner, I would recommend putting your money into an ETF, an equity trading fund. I'm going to do a whole video on ETFs, so definitely go watch that. And when it's out, I'll link it in the description below. Next on the list, I would recommend is the Dividend Kings. What do we mean by the Dividend Kings? They're companies that have been paying dividends for 50 consecutive years or more. And generally, they've increased the amount as well. So it's companies like Coca-Cola, 3M, Johnson & Johnson, those big market cap companies. Now, the reason why they're good is because they've been consistent. You are almost guaranteed that you'll get paid out. Next on the list is the Dividend Aristocrats. They're companies that have been paying dividends for 25 years or more. So they're just below the Dividend Kings. Again, very good investments. Now, the limitations that you'll have with the Dividend Kings and the Dividend Aristocrats is the growth is generally limited. So if you're looking for a growth stock, something like Tesla, where it started off with a couple of $100s, then it went to thousands of dollars, that's not going to really happen with these companies. Another benefit is something called compounding. Being a physicist, Einstein said this quote, "It's the 8th wonder of the world. He who understands it earns it, he who doesn't pays it." I'm going to do a whole video on compounding because it's a very important concept that you should try and understand. I'm going to show you my portfolio. My portfolio is based on growth stocks, so companies which I think will grow in the future, and companies that pay very good dividend yields and generally consistently pay. As you can see, I've got a lot of British companies. I've got AA, Aviva, which is an insurance company, AA Repair Cars, Barclays, Boohoo. I think they're slightly undervalued, Boohoo and Barclays currently at the moment. Banking has taken a massive hit. I've got BP, who are a Dividend King, British Telecoms, BT. Again, they've taken a big hit this year. All right, Cineworld is just short term. I'm going to sell off those shares hopefully in a couple of weeks just to make a quick buck on that. I've got Coca-Cola, I've got NeoInc. Now with NeoInc, I have it in my other invest account when I bought it at about $3.5. But I've bought some more because I think it will be a very good growth company in the future, a bit like Tesla. As you can see, I've got a couple of ETFs, SPDR, I've got Vanguard FTSE All World, Vanguard High Dividend Yield, and Vanguard S&P 500. Just over 50% of my portfolio is made up of ETFs because generally it's very hard for an average trader to outperform the market. So I think ETFs are the way to go. One thing you have to remember is to diversify. ETFs is already diversified and you can check out the biggest holdings they have on that ETF. But if you're doing it yourself, don't put all your eggs in one basket, spread it out. So if one sector is not doing well or there's an issue or one company goes bust, then it minimizes your risk. Now, if you want a free share worth up to £100 and it could potentially be a Dividend King or Dividend Aristocrats, all you have to do is open a Trading 212 account, click the link in the description box below, and you get a free share worth up to £100. And even if you don't want to do it, it's free money because you can sell that share straight away and put the money into your account. So I'm basically giving you free money. Definitely go do that. If you enjoyed this video, please go like and subscribe, and look forward to seeing you in the next one.